Well, hello traders, and a very warm welcome back to the channel. Now today we're going to be discussing my January 2024. So many traders come into 2024 and they have high aspirations. They say to themselves, you know what, 2024 is going to be the year that I finally make it in the markets. Some of you have been trading for a year, 2 years, 3 years. Some of you have even been trading for 5 years plus. And perhaps you've still not got those puzzle pieces to fit together for consistent profitability. You feel like you're just on the edge of breaking through, but you've not quite made it yet. And you come into 2024 super charged up and motivated, and you think, this is going to be the year where I finally break through to that goal. We're already nearly 2 months into 2024, and I just want to ask you, are you any closer to achieving that goal? Be honest with yourself here, and ask yourself if you have that structure to get there. So, without further ado, let's get into my January 2024. I'm going to talk about some of the things that we've done in the markets, some of the trades we took, and also the profit that I managed to withdraw during that period as well, even though it wasn't a particularly profitable period. I'm going to explain to you just a couple of tips on how you can fully leverage prop firms in 2024. Let's get into it. So January 2024 for me, most of you guys will know, I have my track records publicly available on my high risk and on my low risk account. In total, I'm trading around about $1 million just in funded accounts, aside from some personal live funds that I trade as well. So I have 300k with FTMO, that's an 87.5k GBP account, which is about $100k, a $200k account. With FX2 funding, I have around $230,000. And with Nova funding, I have another $400,000. With FTMO, I currently have a $100k challenge because I'm trying to get max funded with FTMO as well. On the 10th of January, I had a 2-hour trade on EuroJPY. I was long in EuroJPY, and this was the setup. Now, within the same week on US dollar CAD, I had another 2-hour trade. Again, I was long in this market, and this is what that setup looked like. Now, after having these 2 trades back to back, I began taking withdrawals. So I have these up on my phone just now, and I'll share them on screen as well. The first withdrawal I took of this year was 3.4k from FTMO on the 4th of January, or on the 5th of January rather. Less than a week later, on the 11th of January, I withdrew 2.7k from my FX2 account. If you're not familiar with FX2, they're a great prop firm. They're not super big in the industry yet, but I've had my FX2 account for probably over a year. In fact, definitely over a year, 13 or 14 months. And I've withdrawn about $20,000 from that firm. I trade it on super low risk at just 0.4%. On the 12th of January, I withdrew £3,000 from my GBP FTMO account. And then on the 22nd of January, I took another withdrawal from FTMO for 3.7k on the 22nd, again in dollars. And then sometime in that same week, I withdrew about $3,500 from Nova Funding as well. Nova Funding is a firm that most of you probably aren't super familiar with. Again, they're not one of those big name firms that are everywhere in the industry, but KB Trading has been using these guys probably for the best part of a year now. Those of you who have been in and around our community, you'll know that something we do for our traders is pass their prop challenges for them. So when we deem a member's at a good place in their trading, they understand how to manage risk, they understand how to trade, but perhaps they don't have the time to go and secure funding themselves, they don't want to go through the stress of the challenge, we can take that stress out of their hands and pass that challenge for them in under 48 hours. So that's how we got to hear about Nova Funding, because they were a firm that allowed us to run our prop pass service. And in all honesty, we've been using them for a year. I have great reviews, and I know many of my members do as well. You can see some large payouts that my members have taken from this firm over the course of the past 12 months as well. So again, another firm to add to your arsenal if you're looking to get funded. That's something we can do for you here at KB. and just allow you to scale your funding very, very quickly. Now, let's talk about some tips of how you can leverage funding to earn a consistent income from the markets. The number one tip that I would give any traders who are looking to make an income from prop firms in 2024 is, first of all, have a mechanical trading strategy. What do I mean by that? You see, most traders, what they do in the markets is they have a rough rules-based system. They'll go and backtest some trading ideas and strategies that they have, that they maybe have a decent idea of how they would do it, and they'll play through that using the replay mode on TradingView. But when it comes to live trading, they struggle with the execution because they don't have the conviction or the confidence in their trading strategy. Why? Because their trading strategy relies heavily on market read and discretion. Most people's trading strategy relies heavily on their ability to predict the future. I mean, seriously, how can you make a consistent income from your ability to predict something that has not yet happened? This is why I would always recommend a mechanical strategy. What does that look like? Well, it's simply a systemized approach to the markets, where every single setup you take is the same setup, and you have a wealth of historical data on that setup, trading it in a very specific way so you know it works over time. Okay, that's a little bit dumbed down, it's a little bit oversimplified, but that's really the framework for a mechanical trading system. Something that's easy to define, easy to trade, that has clear-cut rules with no grey areas, something that you can test in previous market data, and something that you can then translate forward into live market data and execute in a consistent manner. If you want consistent results or consistent output, you need to have consistent input. If what you're doing on the front end is inconsistent, if you're turning up every day and one day you're looking at a 15-minute chart, the next day you're looking at a 1 hour chart or a 1 minute chart, you're trading inconsistently. And what you're going to get out the other side is inconsistency. Another tip that I would give you that goes a little bit against the grain from what you're going to hear on social media, but take it from someone who makes a living from trading. Stop trading on the lower time frames. I see guys trading on 5-minute charts, on 1-minute charts, and they believe they're going to get more opportunities here. But really what ends up happening is they end up becoming a slave to their desk, and they're sitting at their desk all day long, staring at the markets and whatever markets they trade, looking for opportunities. And because they're so focused on these intraday lower time frames, they fail to see the bigger picture. And what happens is they end up getting chopped around in the markets. They see a setup to get long, and 5 minutes later they see a setup to get short, and they can't decide which one to trade. Zoom out a little bit, look at those higher time frames, and focus on something that does not require you to be chained to your desk all day long. Now, another thing that I see traders do, and another tip I would give you, is stop focusing on 1 or 2 pairs within the markets. If you're looking at just 1 or 2 pairs, what this is going to do is it's going to encourage you to force a trade. I'll be honest, I have 15 assets behind me that I look at on a day-to-day basis in the markets, and I don't trade each of those every single day. In fact, there's pairs and assets here that I've not had a setup in for, I don't know, maybe 2 or 3 weeks, maybe even more. Because if you have a mechanical and data-backed system and you're looking for a specific setup, those setups aren't going to come on a day-to-day basis. They might not even come on a week-to-week basis in one single instrument. So if you're trading a handful of different assets, a handful of currency pairs or indexes or commodities, what that's going to do is you're going to get more opportunities over the course of a week or a month, and it's going to encourage you not to force trades. If you have a very black and white, rigid rules-based system that you're looking at, you can just apply that, and you can look at your markets, and whenever it appears in one of those markets, you can just trade it. If you're looking at one pair, you're going to be tempted to force trades in that, because sometimes you're not going to get setups for weeks at a time. And let's be honest, we require trade setups in order to make money, in order to live. That's your job as a trader, is to trade opportunities. So having a wealth of different instruments that you can look at that fit within your rules, that you have data on, is going to allow you those opportunities to make an income from the markets. Now, the last little tip here, and this really is a big one specifically relating to funded accounts, stagger your funded accounts. What do I mean by that? Rather than trading all of your funded accounts at the exact same time on a trade copier, stagger your trading of these accounts. So you start trading your 200k at the start of the month. Whilst your accounts are in drawdown, have other accounts that you've passed on standby, so that when you go maybe 5% in drawdown, you can begin to deploy some of your other accounts and start to trade them. This means that as you recover that 5% drawdown on one account and get back to break even, these other accounts that you've just brought in, they're now up 5% and you can take a 5% withdrawal. This means if you come into the month of March, let's say, and you're 5% down on one account, you can start trading another account alongside that that's at break even or, maybe slightly up. And as your first account recovers the drawdown, your other account ends the month in profit. So if you end March back at break even on the first account, you've made 5%, you're actually up 5% on the other accounts that you brought into the picture. So you can still withdraw 5% at the end of the month, even though your results are technically break even. This is called staggering funded accounts. It's something I'm a massive fan of here at KB, and it's something we actually encourage our members to do as well. This is how I made a 17k month out of January. Despite when you look at my track record, it was actually a -1 or -2% month because I was staggering my funded accounts and I was withdrawing when I was up in profit. This meant that although the month ended negative, I still managed to withdraw profit. If you can master the art of leveraging funded accounts, what this is going to allow you to do is make money even in losing months. You just have to know how to do it. Now guys, look, that's all from this video from me. If you're interested in learning how to leverage funded accounts and a mechanical system, check one of the top links in the description. I've got a little free training video for you. I don't know how long it is off the top of my head, maybe like 30 or 40 minutes. It's going to explain how you can leverage funded accounts and a mechanical system to make money on a month-to-month basis in the markets. And if you're looking to scale your funding as well, please do apply for our Prop Pass service. Please be advised, we don't accept everyone. This is an application-only basis. We need to make sure you're someone who knows what you're doing, understands risk management, and isn't just going to blow the account as soon as you get it. But guys, that's all from me for today. It was a pleasure to speak with you. Any questions, feel free to drop them down in the comment section below. Please do drop a like and consider subscribing if you haven't already, and I'll catch you in the next one.